Good afternoon. This is Rick Ackerman, editor of Rick's Picks, and I hope you're enjoying today's refreshing sell-off as much as I am. This is the fourth straight day the stocks will be down, and you can see that the selling is picking up tempo. But I want to give a couple of leave a couple of technical notes on when it might be time to bottom fish. First, looking at this chart of Apple, I have on the chart what I call a reverse ABC pattern. And judging from the way the stock today sliced through that red line, which those of you who have been coming to these presentations know is an important support. It's what I call the midpoint pivot. The way it's been crushed today very strongly implies that Apple will continue to fall to at least 176.33, the D target of this pattern, before it can turn around. And you know that Apple is such a crucial stock in the institutional portfolio holdings that the broad averages are not likely to turn around until we see Apple make a turn. So I wouldn't look for too much of, I wouldn't bottom fish too aggressively, although I'm going to show you another chart which suggests that it's possible to do some bottom fishing right now. This pattern that I'm about to draw is one that you've seen if you've followed Rick's Picks, but we have in the Dow, a pullback to the green line would trigger what I call a mechanical buy. And you can do this in the diamonds, that would be the equivalent trade, or in the YMU, the E-mini Dow futures. But in any case, the mechanical trade would have a stop loss, a big one. We're talking about a full 1,000 points lower. So there's a lot of risk here, but I'm going to suggest that you take a step back and simply watch the mechanical trade play out, because it's designed in particular to take advantage of really violent shakeouts. And the ideal mechanical trade is one where you're scared to death to buy. So I think we're getting close to that right now. You probably think you got to be crazy to just put your bid there on a green line, but I want you to follow it nonetheless, so you'll have some familiarity with this type of trade, which is part of my hidden pivot method. Again, the buy would be at 25,694, and the stop loss just below the blue line at 24,680. If we move over to the diamonds, and for those of you who actually want to do the trade, perhaps using call options, we've actually tripped the buy signal on the pullback today to 258.35. So what I'd be looking for in this trade is a move from the green line to the red line. But again, this isn't, the green line is not actually a support. It is simply by a mechanical calculation, a place where we come in and buy speculatively with here a stop loss below. Actually, let me reposition this because I see we've had a lower low. This changes everything. We need just a little bit more downside. We're at 257.87, and the mechanical buy would trigger at 257.17. If you're going to buy options, remember this is very speculative. You should probably invest no more in call options than you might on a scratch-off lottery ticket. So it's a very speculative bet, and you should only put into it what you could afford to lose painlessly. So that is the way things look. I know that some of you may have had puts from the very top there. I did put out a buy puts advisory in my own chat room, trading room. I find that most of my subscribers have covered the puts, and you should definitely be out of most of them by now. Let me also mention something that I was promoting last week. It was what I call a mechanical buy in GDX. You see the same thing here that I was just talking about in the diamonds, a pullback to the green line. So we bought last week literally pennies off the low call options. I myself had advised the 6th of September expiration, this 29 strike. I bought them for about 26 cents a piece, And when the stock rallied over the next day, I managed to sell some 31 strike calls for the same price, meaning I've got a $2 vertical spread on for zero. So I can, my worst possibility is losing nothing. I can't lose money on a trade, but I could make as much as $200 per spread. Many subscribers at Rick's Picks did this trade, and I don't keep a P&L record. I only let my subscribers report their actual wins and losses in the chat room, because that's really where the trades become real. I don't really believe in coulda, woulda, shoulda trades and looking with hindsight at trades that we said we'd done, but which could have given very different results for anyone who actually did them. So if you're interested in joining us in the chat room to see what goes on there, if you go to rickackerman.com, you'll see near the top of the page, free access to Rick's Picks. Just leave your name, your email address, click Start My Free Subscription, and you will be instantly enrolled in a 2-week trial subscription. Make sure that you head to the Rick's Picks trading room. It is a great place where traders from around the world meet and share opportunities in real time. So it's a good source of ideas, and you'll find it enormously helpful. There's a companion room called the Coffee House where the discussion is a little more informal. So this is kind of anything goes room. So again, to enroll, simply go to rickackerman.com, and at the top of the page, leave your name and address, no credit card required. So with that, I will wish you a very pleasant good day, and I'll probably be posting sometime later in the week. If you want to be notified of when these presentations begin in live, be sure to check the like on the Facebook page. So that's it, and I will be talking to you again anon and apace.